Welcome back to the best prop for you. Gold is slipping under pressure from a stronger dollar today. There is sticky inflation in the US, and of course the ongoing Middle East risk that keeps oil high, and policy uncertainty alive. That mix is keeping bullion under a lot of tension. So let's go straight to the charts. On the daily, of course, we do see gold is consolidating. Okay, notably, this is a very flat consolidation, so we could actually go either way. But for context, we are trying to cross below the 50 RSI. And if today is a bearish day, and given alongside that we are below the 50 Fibonacci retracement, there is more potential to the downside than there is to the upside currently. The downside support here is at 4,430, whereas if we do move higher, which is also a possibility, then we are looking at a cluster between the upper Bollinger Band and the 50 Fibonacci retracement at 4,850. Obviously, for context, we need to go lower as always. Let me delete this because it really obscures our visual. What do we see here? We see that gold is in some way trying to stabilize after falling pretty much for the entire of this session. We saw a reaction of support, yeah, and which is around 4,650, let's say, but we did have an RSI divergence. We still have it, and the RSI on the 4-hour is below the 50 line and falling. So on the one hand, these candlestick, the 4-hour candlestick with that rejection and a double bottom potentially here because it's a false break, has the potential to move higher. The median line is at 4,700 and the upper line is at 4,750. That said, this is still just the first attempt to break to the downside. If the bounce fails and price can't hold above 4,690 to 4,700, then the move likely continues lower. A stronger hold above the recent low near 4,640 would keep the double bottom idea alive and could push towards the measured move around, well, let's just look now. Simply, we measure the range and that would take us to 4,900. But let's not forget where we came from, because in our last video, we also looked at this double bottom, which literally could be a similar extension of pricing with 100 Fibo, with 100 target measured move, actually bringing us to 4,810, which is the peak of the upper Bollinger Band when volatility was at its highest over the past recent sessions. So what do we want to do now? For more context, we always want to go further down. We're going to look at the 1-hour chart. We do see again this attempt of the double bottom being a little bit more evident here at 4,650, and that gives bulls a short-term opportunity. Price bounced back into the Bollinger Band, despite the fact that we had quite a few hours of bearish candles, and we do have a pin bar, or you want to call it an inverse hammer, that's fine. So the middle band, however, is pointing down, okay? And this is important for context because this is typically what suggests that the upside could be short term. That means that any rally, and let's just pull out our Fibonacci tool again over here, towards 4,690 and 4,700, the 38 and 50 Fibos, is still a possible resistance zone. If price rejects there, especially the 38.2, then the downside likely resumes. If it breaks and holds above the area, then we can talk about a deeper recovery. So the setup is simple. Bullish case, hold above 4,640, yeah, and reclaim 4,700 for a move towards 750, 64, 75, and perhaps even 830. The bearish case, if we fail under 4,700 or 4,690, lose 4,640, which is our local bottom, then the next leg lower starts. And since, of course, we are looking at this still from a corrective standpoint because we have had an impulse up here, we'll be looking for a pullback in that scenario. So the first level that we will need to take into consideration below that low, which is at 50, would be the 61.8 Fibonacci, 4,605. And then the 78.6 at 4,560. The problem with that, however, with any sort of correction, deeper correction, would be that the break of the 50 will flip sentiment on that term to the downside. So for now, gold is still range bound, but the broader technical bias is a bit more bearish unless bulls prove otherwise. Trade safe.